Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, June 7th, 2018. I'm getting this out early because I have a friend coming over and heading south, and I will be able to get the morning notes out tomorrow, so I just wanted to get these out before I left. But anyway, we have some mixed markets today. The Dow seems pretty strong, the NASDAQ seems very weak, and the S&P is bouncing around the unchanged mark. But I did from the morning notes. I said that if it took out the 2765, that would be a short trigger, and basically what you would do is put your stop at the at the previous high. You can, if you want, if anyone took the trade. What you can really do is, if you want to limit your risk, you can put your stop just above the 2775. This is a 5-minute chart, so this is the high, this is the low. Here's your fib retracements. You can see we found buyers at the 200-day moving average on the 5-minute chart. So the bulls are getting very anxious to buy the dips, and it's coming into a time period when we're, anticipating some type of top. But it's what one thing that we know from history is that the bulls don't give up easy. They don't let go of the baton. So it's gonna, you have to be very careful, and you trade a little light in these types of situations. Now, when we go to a 15-minute chart here, remember we had some bearish divergences. Well, the past 2 days have now wiped out those divergences where we're now going up, and this was the high. From this high, you can see the peak on the momentum right here. So there's a chance that we probably are going to have to make another new high. So I'm not, crazy about the short position, but again, if you wanted to give it a little bit of time and see if it plays out. If we come down, say, somewhere into this level here to 2764, again, you could put your stop at the next high. I'm not pounding the table on the short side, and really the reason is that, the markets have been mixed, where we saw the Russell 2000 and the NASDAQ that were really, really strong, and they're making new highs, and we have the Dow that's strong in the we don't really have the S&P following the weakness in the NASDAQ, so we may be getting some money rotating into those, and it's I don't want to chase the long side because of the time period, as well as once if we do make new highs here, we're going to get bearish divergences on the 15-minute chart, and we're also going to get them on the hourly chart here. So we did some divergences here again. The next 2 days wiped that out, so I'm not really convinced that this is the top, and for some reason I'm still looking at that 2800 as a possible top. But if you're just going to follow the buy sell rules and limit your your losses if you get stopped out, the trade was a break below the 2765, and from there, like I said, you can move it to the 2775, less than 0.5%, drawdown on your account if you get stopped out. That's the risk. The reward, if we come down, then we could be looking at a move somewhere, down into the 2733 in that area. And again, I really wouldn't be swinging for the fences on this one. I'm not, I'm not all in on the short side with this. I just don't. I still think they're going to try for that 2800 before we start to see any any real selling that sticks. But if I'm wrong, then I'm short at this level. I'm just going to manage it. But like I said, I'm not really swinging for the fences on this one. There is going to be a time to swing for the fences. If it ends up that I'm wrong and we do start heading down hard, then I'll just wait for the next sell setup and jump on the short and average my short on the downside instead of averaging on the upside on it. But it's definitely not it's a little bit of that tricky time period, and I've wrote this in plenty of my morning notes, and I've said it in my videos, is you have a time to get very aggressive on the long side, you have times to get very aggressive on the short side, and there's times when the market becomes tricky and you either just trade a lot smaller than you typically would, you lower your expectations as far as targets, and or you just stay out and wait for the setup to come into play, and then you jump either the long side or short side, and that's really the time period we're in right now, just because we just have a lot of confusing data to go off of. And it's, this happens. The market's going to kind of make things a little bit confusing sometimes, but it all works itself out in the end. And that's it. As long as you know not to get aggressive and you trade, like I said, if you trade at 20 contracts, if you're trading options, you move it to maybe 10, 5. You don't, and you limit your losses. Where if you do get the drawdown, it's not going to be a big hit. You don't need a whole bunch of big home runs to have a fantastic year, and we've had some great trades. And now is a little bit of the tricky time. That's all it is. And you don't fight it. You don't try to have to force feed a trade. You just let things go. You take your trades, you manage it properly where it doesn't make a difference. If you get stopped out, it's not something you want to do, but it's going to happen in the market. But if it happens, then you just wait for the next setup, and eventually it's going to run out of steam. And when that happens, everybody's going to be jumping on the long side, like we had the 97% bullish reading from yesterday. That means everybody's jumping on that side. So we're going to get in one of the trades that gives us 100, 200 points to the downside. Me personally don't believe it's happening right now. I think they're going to have another charge at these highs, and I still think 2,800 is coming. And if you want, like I said, me personally, I'm not chasing the long side. But if you want, you can jump on the long side if we start taking out these highs, and just put your stop below. You don't have to follow what I'm doing. I'm just letting you know on my end. I don't feel comfortable jumping on the long side when we have sentiment at high levels and we have a time period that we're looking for a top. But they can work. We've seen the market ignore that stuff every once in a while, and it presses higher. And what happens is when it runs out of steam, that's when you get the big moves to the downside. So that's really what I'm going to be waiting for. So right now, again, if you're managing that, if you got the short position at the 27 below the 27.65 level, I'd put my stop here. I don't think you need to put it up here. Or if the 4 points don't really matter, then just put your stop above the 27.79 level. It's really up to you how you want to manage these. Even if it's at the 27.79, it's just about a 0.5% on the the drawdown, so it's not anything huge. And really, what the bears need to do, they need to get it through this 27.60. If they get it through to 27.60, then most likely the next support that's going to come in is going to be the 27.53. This is going to be the important one. And if they get below that, that's when I believe that we're coming down to the 27.37. And that's, right now my short-term target. So with that, let's see what plays out for the rest of the day. If they get above these levels, then you just assume that 2,800 is coming. And if we get below this support level from the 27.53 to the 27.60, then we assume we're coming down to the 27.35, 27.30, right around 34, 35 level. And if we start breaking that, that's when we start identifying the gaps that may get filled, and that's at the 27.10. But again, just trade lightly. Don't swing for the fences on this. We're in a little bit of a tricky time. It's going to work itself out, and once it does, we'll be in a trade that will, we'll be looking for 100, 200 points on the downside. So with that, have a great rest of the day, and I'll talk to you guys in the morning.